This is Mark Anthony with Mercury Time Price Analytics with a very special end-of-day report. ESNQ bonds and crude oil futures trading, algorithmic futures trading for February 12th. I was about to record tonight's video. I walked away from my desk for a few minutes, and when I came back, the first point that I was going to make on tonight's video is about our daily algo bull bear pivot. And the point was how historically overbought this market is. And one of the prime examples of that is every morning at about 8 o'clock, 90 minutes prior to the day session open, our proprietary time price algorithm generates the daily algo bull bear pivot. And if you've watched any of our videos before, you know that that is the single most important fulcrum price, pivot price of the day. And what I was going to lead this video off with was the fact that today was the first day that the daily algo bull pivot was not interacted with. I get back to my desk and I see this. Now, the short level that we were watching into the close was 33.74. As part of our ES and NQ trading service, we have a live chart. Our subscribers have access to it every day. We broadcast it on Zoom. And I've been talking about this particular level for the last hour of the day session, 32.74, 32.74. And we got this, and fortunately, by the time I walked back to my computer, my short entry was right at 30, if I said 32.74, forgive me, 33.74. I walked back to my computer, saw this had happened, put the trade on, got filled right at 33.74. So that was very fortuitous. But here's the point. Today was the first day that ES did not interact with our daily algo bull bear pivot during the day session. It's never happened before. And that in and of itself set off alarm bells, along with some other things I'm going to share with you in a minute. But we get this nasty move down into Globex, and where does it go? Daily algo bull bear pivot, 33.64.99. Now, I know ES trades round number, 25, 50, 75, then the next round number. The algorithm is decimalized, so everything is 2 decimals, 33.64.99. Now, because we trade with algorithms, what we use these pivots for, among other things, is to indicate where to take partial profits on the trade. We recommend you trade in thirds. That means when you get in a position, it starts working in your favor, you look to take the first third of that position off, typically 2 to 4 handles to the good. And then after that, you look for a place to take the middle third of the trade of profit. Typically, you're looking for 6, 8, 10 handles or more. In a market as choppy as this, I mean, you're lucky to get 5. But then you leave the runner on. So entering this trade at 74, where do you take partial profit? Well, it's pretty easy to know where to, and I don't want to imply trading is easy. This is as difficult an environment as I've ever seen. But the one part of it that you don't have to think about with our system is where to take partial profits. It was right here, into the daily algo bull bear pivot. Now I'm still long, and I'll remain long. We had several short entries today. One of them was scratched, another one made a couple handles, another one made about 10 handles. And then the short we tried to get in at the end of the day, we gave back a couple handles. We set very tight stops. So it was still a positive day. But it was a small positive day. And that's okay. Because if you can get through these very difficult trading days and eke out a profit, well, then eventually it gets a whole lot easier. And our system booked well over 600 handles in January. 600. Well over 600. And as I mentioned, our subscribers today, you get times where the market just gives out handles, and then there's some payback. There's times thereafter where it gets very, very difficult. But then the tape will eventually loosen up and it's tradable again. Now, what we're seeing down here, we need a move down in this market to make it tradable. It would be healthy. I know this looks ugly, but this nonsense that we had today is not healthy. The markets, in order to be healthy, they need to breathe in and out, in and out. They can't go straight up, because when they go straight up and you throw the math on its head, then you get this kind of nonsense. Now, to give you an idea just how oversold these markets are, at the end of the day, the full end of the day, not the 4:15 futures close, but after that last half hour from 4:30 to 5 o'clock Eastern time, when all that data is in, that's when I run the daily Algo bull bear pivots. And those pivots are long cycle pivots, and they apply to the Globex Open all the way through till 5 o'clock the next afternoon. Now, this is how historically overbought we are. Is it not going to let me show you that? Bear with me a second. I'll grab this for you. Here it is. This is today's, at the end of the day today, this is the long cycle Mercury band upper level. Now, I want you to think about that. You've got a short cycle, which is quite a few days, and then a long cycle, which is very long. And we're not talking about the mid-level or the lower level. We're talking about the long cycle upper level. 74 handles below where we closed the day session, or more accurately put, today's day session closed 74 handles above the long cycle upper level. This is the most overbought reading that we have ever seen, ever. And so you have these knuckleheads on the financial news channels today, all day long. And I'm not talking about the hosts. I'm talking about the guests that work for XYZ firm, whoever. I don't care. But there were multiple of them that came on today, pounding the table. Buy. The coronavirus narrative, it's going to get better. The Fed's got your back. Nonsense. And we hate to talk about this virus in terms of trading the market, but we have to, because it's affecting the market. So yes, it's an unspeakable tragedy, but we have to talk about this because it affects the tape. And if you trade for a living, we have to talk about these things. There is no way that situation with the coronavirus is anywhere near being resolved. And the people that are telling you that is are flat out bold-faced liars, every one of them. They come on the news, they tell you to buy, while at the same time they're selling, or their firms are selling into the rallies they're telling you to buy. And I'll show you what I'm talking about. Do we have it here on this chart? No. Let's go over here to the advanced decline line for the S&P 500, ADSPD. And let's make this chart a shorter time frame. See this move down here? This isn't Uncle Bob and Aunt Mary selling. It's a sell program. Sell program. We saw these sell programs all day. By my count, there were at least 4 of them, maybe 5. So at the same time, they're telling you all day long, buy. The coronavirus story is going to get better. The Fed has your back. Bull. That's not true. They're not telling you the truth. Because you can't have sell programs running all day by the very firms that employ these knuckleheads, idiots, morons. We don't curse on our live chart. We certainly don't curse on these videos, but there's a whole lot worse terms than knucklehead or idiot that I'd like to use. Because where do they pull the rug? They always pull the rug when you're not in front of your screen, in Globex. Now, Well, let's just assume that we don't get the usual ramp that we've been getting when the Asian markets open, and we don't get the usual ramp that we've been getting when the European market opens. And you wake up tomorrow and you look at the US equity day session. Do you know how many people are trapped long up here? And this is what happened when you listen to those people that tell you to buy, 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 while their firms are selling into every rally. Selling into the rally, selling into the rally, selling into the rally, selling into the rally, selling into the rally. And then they ramp it up at the end of the day, get everybody feeling good going into the close, and then they pull this nonsense. So here's the point, among many points. If you are trying to trade these markets just by looking at a chart or looking at the off-the-shelf indicators that your trading system has, you're going to have problems. Bonds, we called this late in the afternoon, bonds hit what we believe is going to be a short-term low. You look at the chart, it's got a W bottom. This market is bad news. And everybody is trying to buy these dips. But you can see the professionals, the institutions, they're selling into these. They've been doing this since last Thursday. Now, here's your opening print this morning. Every move above in the opening print is the 9:30 Eastern Time day session market open. Every one of these is getting sold into. And today, and this is no different than it was last Wednesday, no different than it was last Thursday, ES spent all day long trying to just get back above the day session opening print. Does that sound like a healthy market? Should the market spend all day long trying to get above the opening print? And then at the end of the day, you get this nonsense, and it looks really good until this happens. Now you can see how precise our algos are. It stops to the dime at these pivots, so these allow you to trade these crazy markets with more precision. But if you go to our website, right on our homepage, mercurysignals.com, you'll find a video that was recorded on Saturday. It's called Calm Before the Storm. And that's the video companion to the weekly newsletter that we write, which, not coincidentally, is also called Calm Before the Storm. If you go to our website, right on the homepage is that video. And it's a long video. It's about 45 minutes because I got into a lot of detail about what was wrong with these markets and why I expected this kind of move. Now, here's something else that we've got going on. As I mentioned our subscribers many, many times today, my proprietary time price cycles call for a market turn starting this afternoon into tomorrow. I mentioned it probably a dozen times today. Put it on our Slack channel. Reminded our subscribers. Now, there's a saying, if you've ever read or studied any of W.D. Gann's work, there's an expression, and I don't know exactly where this comes from. It may be from Gann itself. It may be from someone who studied him. So I don't know where precisely to attribute this quote. But the quote is, the news breaks with the cycles. The news breaks with the cycles. And so this is going to be attributed to news that hit tonight out of China regarding the coronavirus. The cycle is the cycle is the cycle. But they always blame it on a news event, because the same type of cyclical work we do is done by the institutions. But they don't want you to know there's a cycle that creates this kind of stuff. They want you to just, hey, it's random. It's a random thing. It was caused by a bad news item. Don't worry about it. Buy the dip. And if those institutions know what they're doing, they've got the same cycle work that I've got. And they knew this cycle was coming in today. And here's how you tell when they come on TV and they give you the stupidest reason in the world to buy the dip. and that is that the bad news is out regarding the virus. It's going to get better. China's sending their people back to work tomorrow. And they're telling you that's the reason to buy the dip. Now, if that isn't the dumbest thing I have ever heard on financial news TV, and there's a lot of dumb things said, let me give you this piece of advice. If you trade these markets and you want to have the financial news channels on, keep the sound off. Don't listen to them. Don't. They have an agenda, and it's not to help you. So, since I don't drink, I'm going to go make a cup of tea and chill out a little bit. But I just want you to know, if you're a trader and you're struggling, or you're wanting to learn how to trade, or for some reason, heaven forbid, you lost your job, you need an income, look, past performance is not indicative of future results. You know how that goes. We can help teach you to trade. We're not going to promise you X amount of money that you're going to make, but we will teach you how to trade like a professional, so that even in the most difficult markets, like we've seen the last few days, we will show you how to manage risk. We cannot promise you're going to make X amount of money, but I can promise you this. We will teach you how to manage risk like a professional. And the key to trading isn't knowing when to be long or short. The key to trading, to profitable trading, is proper risk management. There's a reason that the overwhelming majority of people that trade futures lose money and blow up their account and then start all over again. There's a reason there's only a small percentage of people can professionally trade for a living and consistently be profitable. And when I say consistently, I don't mean every day. I'm talking about week after week, month after month, year after year, be profitable. Because they know things and do things regarding risk management that newer traders don't. So if you haven't been to our website, we invite you to check it out, mercurysignals.com, right there on the screen. The cost of our ESNQ service is a little bit more than one E-mini handle a week. E-mini handle's $50. It's a little bit more than that a week. Not only do we give you a live chart and a Slack channel and all of these pivots that you see and the oscillators that you see on the screen and the algorithms you see on the screen, but we will teach you how to manage risk like a professional. So we hope you go to our website, check out our service. We bill bi-weekly. We don't bill monthly. So if you don't like our service, you can quit anytime. You're not even committing to a month if you start. But we bill bi-weekly, so you can cancel anytime. Whatever rate you join at is guaranteed for life. No matter what future rate increases occur, they will not affect you. And we hope that you'll take a look at our website, watch that video I mentioned, Calm Before the Storm. I want to leave you with this. The knuckleheads that are touting the equity market on TV, they're not talking about what the bond market's telling you. They're not talking about what this panic bid into the Swiss franc is telling you. They're not mentioning the fact, they'll tell you that crude oil is down, but they don't mention it in the context that you don't have a move in crude oil from, what, $62 down to 49 in a month, which by my math is, what, 23 or so %? You don't have that happen in a month. You can't have bonds saying one thing and crude oil saying one thing, and this panic bid into the US dollar is a safe haven, and this panic bid into the Swiss franc is a safe haven. At the same time that you should be piling into stocks, buying every dip, because these people on TV tell you that, well, they're doing just the opposite. So please, if you're struggling with these markets, if you want to learn how to trade like a professional, please check out our website. You won't regret it. If you're a bond or a crude oil trader, I'll put our bond and crude oil algo up against anything, anywhere, anytime, period. So please check out our website. Please consider trying out our service. You won't regret it. We thank you so much for your time, as always. God bless you. God bless your family. And we hope to see you again tomorrow.